To this panel on insuring uncertainty. Obviously, we're all aware that we live in a much more unpredictable world and that there are competing risks hitting us from all angles. So a very timely and important topic. I will introduce the panel. Hopefully our final panelist will arrive during that process, but if not, I will introduce him anyway, and hopefully he will join us in a minute. So first of all, we have Bart De Smet, Chairman of Ageas, an insurance company. Christiana Riley, at the end, CEO of Deutsche Bank USA, a managing board member. Gori, President and CEO of Manulife. And Achim Steiner, who hopefully will join us in a minute, who's administrator of the United Nations Development Programme. So, just to kick off, Roy, I just wanted to start with you. As I said, we all have this sense of living in a riskier, more unpredictable world. Can you just describe from your experience both what keeps you up at night, but as importantly, what's sort of fundamentally changed in the way that you see risk today?
Yeah. Well, I firstly would agree that we are living in a fundamentally different world to the one that we've lived in for the last 3 or 4 decades. There is an incredible amount of uncertainty and risk as we look to the horizon, and that degree of uncertainty is far, far greater than what we've seen in the past. Now, the good news for us as an industry is that that's what we do. We help individuals and corporations and governments manage risk, reduce risk, and deal with uncertainty. So I definitely would agree that this is a new era that we're operating in. It's going to require new skills and capabilities that, quite frankly, we haven't necessarily leveraged in the past. What's keeping me up at night? I would argue that there are, at least for me personally, 3 Ds that certainly keep me up at night. There's the topic of deglobalization. Again, the rules of the road, so to speak, as it relates to global trade for the last 3 decades are going to be very different to what we will experience in the next decade. Now, I don't think that translates into decoupling, but deglobalization is definitely a theme that we're going to have to grapple with, and we'll come to grips with specifically as it relates to a new risk, certainly to global growth, and there are many other risks associated with that. So that would be one thing that keeps me up at night. The second D would be the D of deleveraging. And again, central banks around the world are increasing interest rates to fight inflation, and there are significant consequences associated with that for both consumers and corporations who are dealing with higher rates in terms of managing their own portfolios of debt, which is, again, something we've not seen for many, many decades. The final D that I would reference is decarbonisation. I think we all acknowledge, and what's been the big topic of conversation through Davos, is that we're not decarbonising the planet at a fast enough pace. And that is an issue that we have to tackle with much greater urgency. They're certainly the things that are keeping me up at night. I think insurance companies have a critical role to play in not only dealing with those risks, but even dealing with the broader agenda of, how do we help people think about the health crisis that is looming, and quite frankly that we've experienced through the pandemic, and the lack of healthcare protection that exists today, and even life insurance coverage and protection. So our role, I think, has been accentuated through the need that's been demonstrated through the pandemic. Our job is to help protect people, deal with those kind of crises, and not is it just to help them deal with a scenario that may come. I think it's also to help them prevent the scenario from happening, and this is where I think insurance companies are starting to pivot, rather than being reactive to a problem, being more proactive. And more specifically, I would highlight that we're trying to work with clients so that they are living healthier lives, so that they don't need to leverage the healthcare system down the track. And one quick example that I'd give you is that we're working with a company called Gallery or Grail, where we're offering to our customers cancer detection tests proactively. And we know that over the course of one's life, they've got a 50% chance of getting cancer, which is alarmingly high. 1 in 2 people will get cancer in their lifetime. But we also know that if it's detected early, there's a 90% better chance of success in dealing with that threat. So I'm excited about that because I think this is the role that we have to play, is helping manage risk for customers, reducing uncertainty, but that's not just dealing with the problem at the end. I think it is about being more proactive, and I think that's where our industry needs to pivot.
Okay, it's interesting. But I'm going to come to you in 1 second on the more general side of things, but just on this topic, Christiana, what do you see as the ability in financial markets, for example, to force change, to avoid some of these risks coming through by the way you lend, by the way you offer capital? I mean, I think this point of the extent to which financial service industries can change behavior is key. So just can you give your perspective on that?
Yeah, absolutely. So first of all, it's a pleasure to be part of the panel and represent, I think, the broader ecosystem that we all exist in around managing and insuring risk. And I very much sign up to your 3D framework in terms of what's keeping you up at night. And maybe would add just maybe two other Ds as we think about some of the longer term things that are going on, and then talk a little bit about the role that banks and insurance companies can play in forcing some of the change through pinch points that we can create. I would add 2 more Ds that I think are relevant as we think about the decade ahead. One, sovereign. That's another D.
Wow. Maybe Bart will come up with a new letter. So do think about that. But keep going.
Sovereign indebtedness.
Yep.
I do think, from a systemic risk management perspective is something that we're going to need to be confronting as we deal with this whole dynamic of deglobalization, and that applies equally in developing markets as it also does in some of the prominent Southern European developed markets. And then demographics, I think, as a large mega trend. Certainly we all saw the news from China this week in terms of significantly slowing population growth, but also closer to home here in Europe. We think about Deutsche Bank from a German perspective. The working age population in Germany is set to shrink by more than 5% between now and 2030, and those are major societal shifts that will force us to think differently about the extent of automation in the economy, need to think differently about immigration policies. So sticking with the D framework. But back to your question, Thorold, about what is going on both in insurance and banking in terms of frameworks that we apply to help drive toward some of these. I'll point to the Net Zero Banking Alliance as a prominent example of that, and how the very real and near-term commitments that institutions have had to make around that certainly initially. So obviously the Net Zero Banking Alliance is about articulating ultimately the commitment to net zero, but within very clear interim commitments. So starting with the communication around the institution's baseline, which Deutsche Bank communicated earlier this year, and then the commitment on sector-specific pathways, as in, so when we've communicated our pathways on the 4 highest carbon emitting intensive industries, and that now drives our capital allocation decisions, because we have clearly told the market the points on the pathway that we will be getting to at specific points in time. And therefore, as I think about the deployment of our trillion of balance sheet, and in particular our credit and our lending, it drives and sets capacity and risk limits based on carbon emissions that allow me to support certain companies as they drive toward transition, and others who haven't yet indicated a clear path to transition.
And to what extent does the cost of capital reflect this? I mean, are people who are doing the right thing, in inverted commas, getting cheaper and more plentiful access to capital or not?
So we're moving in that direction. And certainly there's some wonderful initiatives around this that are public-private partnerships and facilitated by organizations like the Nature Conservancy, for example, that deal with the issue of sovereign indebtedness, developing countries with high levels of indebtedness who can make commitments, for example, around land conservation, reforestation, right, that allow investors to put capital behind those initiatives and drive for less expensive debt instruments to replace.
What I mean is, and I'm going to come to you, but I just want to just actually get to the bottom of this. If you're a wind company versus an oil company, is there any sense that, from a cost of capital perspective, too many people are still looking at your profitability, not what you're doing?
So the 2022-2023 answer to that is that we've obviously seen some major dislocations to that long-term trajectory toward a lower cost of capital because of the urgency and immediacy of the energy crisis this year. But the long-term trajectory is visible, tangible, and evidenceable. Is
it? Okay, good. Bart, just to change direction a little bit from the sort of financial side to the real risk of immediate, whether it's pandemics and stuff that we've seen hit us, can you talk about how the nature of those risks has changed, both from an insurer's perspective, but also more generally?
Well, to stay a bit in line with the two earlier speakers, I would also want to ask two Ds. So we're already at 5 + 2 is 7. No, and it's related to a question. The first one is a kind of a demutualization. So we see more and more individual demand, also more and more, let's say, segmenting, which is at the end could lead to a part of the population that cannot be insured anymore. And another D is, for me, the disruption of the law of large numbers. So insurance has always been based on we insure millions of people to at the end have thousands that really enter into an event where they introduce a claim. And if you look to the more recent risks, like it started a bit with terrorism, you have pandemic, you have cyber risk, you have the very big cat nats. These are mostly risks.
And these are things that affect lots of people at once.
Yeah, when they happen, take the example of business interruption and pandemic. If there is a pandemic, a government can decide to block all the further economic activity. All your insured customers are able to introduce a claim. So that's a big issue where we believe that the way to go forward, because that's what we expected to do, to find solutions, is one where for these extreme situations you go to public-private collaboration where we have the direct insurance supplemented by the reinsurers, and then part of the loss that can be taken up by governments that then on their way can also go for reinsurance. So these kind of risks that really affect almost all let's say, members of the insured population, this is something that we did not see 10, 15 years ago.
And would you include extreme weather events in that or not?
Let's say, if I look to a practice, the situation of our home country is Belgium, and you can say that in the previous century, if we had once every 10 years a big storm or a flooding, that was the normal course. Now we can say every year you have to take into account X 10 millions of loss due to hailstorms, floodings, windstorms, things like that. And we have a legislation where it's in the household insurance, you have automatically a coverage for all these risks. And we have been dealing with that since 2004 until now, with 1 year where it was really exceptional, 2 years ago, where we had to fall back on, let's say, part of the damage to be covered by the government. And this is something where we say, okay, this cannot happen every year, because you look to the impact and also the way the industry is capitalized, it's impossible to cover these risks as they were covered in the past, if it could happen once in 100 years.
I'm going to go to Achim in a minute. Welcome, by the way. Thank you for joining us. Is there just not enough capital? I mean, obviously capital's more expensive now. You've got all of these extra risks. I mean, is a lot of this stuff just no longer insurable?
Well, no longer insurable. I think it needs other solutions. Okay. And that's something we should work up. I also believe that, and that's maybe linked to the point of the capital, today the solvency regime, if I look to it in Europe, doesn't incentivize insurers also either to really make their choices. For instance, the rules are not really supportive for long-term commitments or investments in infrastructure, which could be, let's say, an added value of the insurance industry to not maybe for the climate change, but for the adaptability.
To drive change.
To reduce the risk of the impact of some of the natural catastrophes.
I'm going to come to Achim next about people who don't have insurance and how we should think about that. But do either of you have any comments to add to that before we go there?
No, I think you covered it well. I don't think there's a challenge of a lack of capital per se, but I think it is about working in partnership and in collaboration with governments and regulators to make the environment a lot easier. I think the bigger issue that we see when we think about the various markets that we operate in is that it's often very difficult to get stuff done. So it's the bureaucracy and this lack of speed that I think is so critical towards driving the direction of the capital in the right spaces, less than if there is sufficient capital. So I would agree with the general comments that the evolution from a capital perspective is certainly happening. I think there's sufficient capital. I think one thing that can be improved on is the speed of decision making and the reduction in bureaucracy that's necessary to facilitate that.
Well, let's come back to that in terms of ways that we've learned from the pandemic and other things about things that need to change for next time. But Achim, can you just talk a little bit about obviously these risks apply globally, and in certain countries there is insurance that people can either buy or afford. In other countries, that doesn't exist. Can you talk a little bit about, how you think about, creating systems to support people who face the same challenges without that safety net?
Certainly, I'm very pleased to join this wonderful panel. I think you began the discussion also about what is changing in a sense in the world of insurance. And I think one of the interesting things is also a reason why, for example, a United Nations Development Program today, through an insurance development forum with some of the leading insurance companies in the world, is coming together with other actors to think about what is the role of insurance in a larger development context. Right. And I think this is in part a recognition that, first of all, the nature of risk is evolving, particularly on the back of climate change, which has raised new challenges. I mean, I remember a few years sitting here with insurance executives, chief executives, and basically we are not worried about this. I think the world has changed, and if you look at, for instance, the disaster in just Germany in the Ahr, which was a very localized extreme catastrophe, total cost roughly estimated, I think, at 33 billion euros. Now, insurance only covered 8 billion of that, and even that 8 billion is, challenging the insurance industry. So that was one reason, because these risks have become systemic to national economies. A small island developing state today, within 6 hours, can lose a third of its GDP. So as a development organization, looking at this kind of risk and how to, in a sense, hedge or insure against it or to mitigate that risk is obviously a central preoccupation. The other end of the spectrum is that universe of people who are exposed to absolute risks such as health crisis and have no means of protecting themselves, because there is, in many developing countries, not yet the fiscal capacity to provide a national health insurance scheme. Yep. And so on two fronts we have begun to work with the insurance industry. Now is one on the climate change issue. What kinds of insurance are conceivable even at the level of national assets, for example? And here I often draw on an illustration when in the 60s, for instance, in Germany, hail insurance was something that simply wasn't...
What insurance, sorry?
Hail, against hail damage for farmers.
Okay.
Now, sounds very exotic, but a farmer who happens to be in the track of a hailstorm loses everything in an hour or in 5 minutes. But it's a risk that you think might not affect you, but it's existential. Farmers literally very often went bankrupt as a result of that. So the government essentially took a decision to create an obligatory regulatory framework where health insurance was essentially not an option anymore. Every farmer had to contribute, brought the premiums down significantly, and created essentially for the farming community a kind of safety net. So that's one end of the spectrum. The other reason what is so fascinating in today's world, and that's why we are so keen to also work with the insurance sector, is that essentially through the capacity of insurance companies to price risk, and also with artificial intelligence and with the data and the digital data that is available to us today, we are able to, at least that is the hypothesis, bring down very often the premium significantly by being able to price much better, much more accurate the risk. And there you come then into the territory where maybe a government would be well advised to provide an incentive at 1/10 of the cost of providing its own national health insurance scheme by buying down that threshold at which an insurance company actually is able to offer micro health insurance. Right. We have literally hundreds of millions of people without any health insurance whatsoever. As a development organization, one of the most troubling phenomena is that 40% of people who have escaped poverty and fall back into extreme poverty do so as a result of essentially health crisis in their family. Right. And these are the frontiers that we're now exploring together with the insurance sector. because actuarial science is not something I traditionally would have associated with thinking about the future of development. Today it actually becomes material to the point where it could determine whether 50% of the population have any form of insurance or not in the country.
Well, there's a lot to unpack out of that. That's really, really interesting. Do you guys have any immediate response to that?
I would just add to the comment on the underinsured. I think this is a very significant problem, and it's a problem in developed markets, but it's also a significant problem in underdeveloped or developing markets. And we're fortunate enough to operate across 3 broad geographies: Canada, the US, and Asia. We've been in Asia for more than 120 years. We sold our first insurance policy in Shanghai in 1897. And there are 2 billion people in the middle class in Asia today. That's forecast to grow to 3.5 billion by 2050. And the penetration rates in Asia are 1/10 of the penetration rates in developed markets. And this is an opportunity, but it's also a problem. And we do need to work harder to come up with creative solutions. As an industry, we can't simply sell the products that we sell in North America in Asia. They're just not going to work. So we have to do a lot to educate the market on the importance of insurance and the value that insurance can provide. But also we have to change our products. In Indonesia, for example, we have a product called Prima Jaga, which requires a premium of only $1 a month. Now, this is a really important product as a starter to getting someone used to the idea of insurance in a market where it's not existed for decades, which is what we clearly have seen in the developed markets of Europe and North America. So I do think we as an industry need to really lift our game to deal with this underinsured issue that, quite frankly, is causing problems and will create problems in the future.
Just to go back to Achim, how do you guys think about the balance between insuring risk and preparing individuals to be flexible to react, or systems or countries for that matter, to the risks that happen? I mean, how do you think about that balance? Because obviously you can't insure everything for everybody all the time, but so much of it is about being able to handle it when it happens as well.
Well, there's a simple logic to climate change. Let's do something about what's driving climate change. That's literally the only answer I can come up with in terms of reducing the risk. Frankly, if you look at what is happening to us already today, I think it's not difficult to imagine that that curve of risk is actually growing exponentially in relation to climate change impacts. We just hosted a few days ago in Geneva a climate resilience conference to the Secretary General of the United Nations, the Prime Minister of Pakistan, to raise support for the reconstruction rehabilitation of Pakistan after these catastrophic flood events. They have taken on a magnitude that a country on its own simply cannot cope with. But we cannot organize an emergency pledging conference after every natural disaster, and they're going to grow. So we are looking at insurance as one way in which countries can mitigate that risk of catastrophic damage and economically not being able to recover. There are examples of that already in the Caribbean. But at the end of the day, everything is insurable. I mean, I say this as a lay person, but we read often about, somebody's tennis arm being insured. I mean, if you have the money, you can buy insurance, because it's essentially a matter of assessing the risk, and then somebody will offer insurance. For us as a development organization, I think increasingly for many governments, it's actually the affordability that is the variable. And this is where the frontier of rethinking insurance in terms of helping the poor, maybe through leveraging the private sector in a regulated insurance environment, because obviously governments have to regulate an insurance market, but where the products that you're able to offer and to develop, you mentioned the $1 insurance, actually suddenly become a shortcut to, first of all, reducing the risk of catastrophic events on a household. But at the same time, you're also helping a country to mitigate risk at a more macroeconomic level. And that requires, and this is our role, we have established an insurance and risk finance facility now. We are now working in 35 countries, helping governments to bring in some of the expertise, to review their regulatory environment, and to essentially cost offering new insurance services.
I'm going to go to Bart, but I just want to, on your point about Pakistan, where does the sort of loss and damage debate around climate change factor into that? I mean, is that going to be something that funds are created centrally to address those types of events? I mean, how do you see that developing?
Well, essentially the loss and damage facility has become now an inevitability because of the kinds of catastrophic events we see in Pakistan.
But is that going to be the main mechanism to have something that can click into action fast, do you think?
I would be careful about that. I don't think, given the magnitude of what we are now facing, there is no silver bullet. But the loss and damage facility is a first attempt to try and essentially leverage mutuality, if I can come back to your point, and therefore expand the scope for actually standing up a facility that is commensurate with the scale of the risk and the payouts that would be needed. I think there is going to be a great deal of politics. This is entirely new terrain. I mean, we are having the first planetary loss and damage debate in human history on the back of, an escalating climate crisis. So this is complicated new territory. But frankly, it's inevitable, because otherwise we're going to have emergency conferences every 3 weeks because of a disaster somewhere where an entire nation is in free fall. So they are related, but I think in part what we're discussing here is also a way in which you can't just look to a loss and damage facility to deal with those risks. So what other means do we have to mitigate those risks? And they start sometimes with household insurance. Poor people spend money on health. It's just they spend it in a sense at the point where it's extremely expensive, namely in the curative stage instead of prevention, for example. Or indeed, health insurance could prevent them from falling into abject poverty because they're taking their mother to a doctor or their daughter to a hospital.
So let's dig into this question of availability and sort of how you get this net spread wider. A few things have been mentioned around using technology, some forced savings or forced insurance mechanisms that can be used, changes in regulation. Bart, can you give your perspective on this?
Well, first of all, what we still see is that insurance is still a rather local business. You have a number of players that are active in many countries. If I look to our group and I listen to the intervention from Manulife, the countries where we are, we try to be as supportive as possible to the citizens with micro-insurance in a number of our Asian countries, crop insurance in a country like India, indeed to be able in the countries where you're active, where you also have a capital base, are regulated, to do the best possible. That's one thing. Another thing is, and that's the point of prevention, I think we have to continue to give tools to our customers, potential customers, in order to avoid, because nobody likes to be in a situation where they have to introduce a claim. We have, for instance, as a group, an objective that by 2024, 25% of the premiums we collect should be for products where it gives an incentive to the customer to be more in line with the climate change. For instance, car insurance, drive less, house insurance, be better isolated, all these things. So that's another thing. The same with health. The proposals like stimulating your customers to be more proactive and have regular checkups, so that makes it possible to make also insurance more affordable. Right. Another point on then, you then come in the geographies where insurance is poorly developed, maybe because there is not a possibility for the citizens to afford it. And there I come again on this, and it's more complex, but again on this collaboration between direct insurance, reinsurance and governance. If you see what do we do in the Western world when something terrible happens in one of these countries, all of a sudden we're all willing to send millions, hundreds of millions of money to these countries to help them rebuild what has been damaged. Maybe there should be a kind of a very important, let's say, pool of insurance, of government money that can be used in case of these extreme, not to put them on the table when it happened, but to do it earlier in the process and to combine that with affordable insurance for the people, the citizens in those countries.
Interesting. Christiana, do you want to?
Yeah, look, I think there have been some really interesting observations made also about the opportunities for cooperation, public-private. So much of ultimately what this comes down to comes also down to, you talked about mitigating our risks. We've got to first understand the risks, right, and ensure that we have the right data that underpins this, and we understand how that affects each of our business models. And then coming back to the question of availability of capital, how much capital we can put behind these issues. And so reflecting a little bit on the arc of the banking industry and what we have learned out of the great financial crisis of 15 years ago, stress testing has become a really, really important part of how we prove to public sector stakeholders that we understand our risks, that we understand how much capital we need to put behind those risks, and therefore, we are and can be a trusted partner and part of the solution as opposed to part of the problem, as we may previously have been. And the idea of incorporating now climate risks and a whole new set of increasingly complex risks into the way we think about stress testing is incredibly important to make sure that we are again, have an accurate picture of how these risks are going to be affecting our business model going forward, how that affects the amount of capital we need to hold the buffer against those risks, which therefore doesn't impede us or doesn't lead us to holding excess capital that would then not allow us to put that capital to work for growth and innovation and in support of longer term change. So a lot of this comes down to data, a realistic assessment, embedding that into effective stress testing in order to make sure that we have adequate capital.
So just a quick follow-up to that. I mean, one of the questions is the availability of capital, the other is the cost of capital. And obviously, if you've got a higher risk of catastrophic events and you've got more expensive money, the cost of this insurance is going to be higher, I would assume. Is there any way to mitigate that trend that we're facing?
I think there is. I think that scale is clearly one way. I think organisations like ours, as we continue to grow, will get scale economies, which will allow us to price more competitively to offset some of those higher costs, which are clearly on the horizon. And to throw another D out there, I think digitization is another massive opportunity. And again, if I look back at our industry, and perhaps even broader than our industry to other industries, in the last decade or so, a lot of the digitization agenda has been around mitigating an issue. In the pandemic, we all went to digitize because we couldn't do face-to-face. So it was to mitigate the issue of not having face-to-face as an opportunity. Or when we see inflationary costs increase, we digitize to offset that cost. And I think the pivot and the biggest opportunity is that we start to digitize to the opportunity and the potential, which I think is significant. And with new technologies such as AI, robotics, GPT, I think this is going to be a game changer towards really creating much greater efficiencies, which should not only allow us to deal with some of those headwinds and cost increases, but quite frankly should allow us to be even more competitive from a pricing perspective.
So I hate to do this, but I'm going to add a D, I think. So can you use this digitalization to democratize insurance more and to address this challenge of it being more available to more people at a sensible price?
Absolutely. I think one of the biggest barriers to the democratization of insurance is access. And I think with digital tools and technologies, nearly every person on the planet has a smartphone now. And I think the ability to simplify your products and to create much, much easier interfaces is going to be a tremendous opportunity to getting to consumers. Because in the past, our industry is notoriously bad at having 36-page application forms with 158 questions, and it requires an advisor to sit with someone to walk them through. And for very complex insurance, yes, that's still going to be required to some extent. But for a lot of the more basic levels of insurance that provide incredible value to the masses, it's going to be through digitization that we're able to access those consumers.
Do you want to say something?
Well, maybe a bit nuanced view, in the sense that if I look to even a very developed country like our home country, Belgium, still 20 to 25% of the people do not bank digitally. The percentage is much lower in the developing countries. If I look, we are active in China, Thailand, Malaysia. Everybody uses the mobile, but to give the example of China, we nevertheless, although the full process is digitalized, we still need 400,000 salespeople to convince the Chinese people to be, first of all, to make them aware of the risk they run, to convince them to go for an insurance for their health or in case of that. But once they are convinced, it's fully digital. So there is still this phase of information and conviction where the digital solutions today apparently do not fully cover what would be needed to make it accessible for everybody.
So I think this point about simplification is key. And I think I'd love to, we've got 10 minutes left. I want to leave some room for questions, so please all have a think, because I will call on you and I'd love some questions at the end. I just want all of you to quickly go through and say, what governments can do to make this possible. So, whether it's forced saving or simplifying regulation or whatever it is. Can you just, I'll start with Achim. Can we just go through and give your quick take on, where governments can really make a difference or what they need to change to make a difference on this?
Well, like all good and smart markets, they're not just a matter of enabling somebody to come and set up a stall and sell something. So I think regulating markets is a mixture between protecting consumers, protecting corporations, but it's also creating the incentives that allow a insurance company to see an opportunity, or at least in order to have a license to operate, an obligation to also service those in a sense who traditionally would not have been either able to afford it. And I think we are seeing very interesting examples of that, and they don't always have to be, in a sense, market distorting. They're actually market expanding, to your point. Scale is one of the answers of the insurance industry to deal with the problem that is actually now becoming acute. Climate change is going to actually leave many more people exposed and even losing their ability to insure. If you go to the panhandle in Florida now, if sea levels are rising, water is coming through the ground, you're not going to find any insurance that's going to insure your building. Now that's the wealthier end of our society. What about people who are living in floodplains? What about people who are living in very risky territories in the Himalayas? We have an entirely new phenomenon there, these glacial outburst floods, where rapid melting, faster melting of the ice in spring creates these lakes suddenly in valleys that burst out like a dam has broken and create a catastrophic flood. This was never there before. Nobody's going to insure you against that. So we have to find ways in which we either raise the scale so that we can bring the premium and the cost down. Otherwise, more and more people will do what you just said do in other parts of the country. They actually don't insure themselves because they can't afford to.
So this is really interesting, Christiana. It's great that you're next, because the question I was going to have, you talked about the financial crisis. In this scenario that Achim paints around Florida, let's say, not only do you have the risk to your property of rising water, you have the risk that you can't sell your property and it's not worth anything anymore. So the financing risk is massive as well. Can you just talk about how government should think about that as we look forward to not look forward in a good way, but as we look to the future with a situation where some of these places might be, whether it's lack of water for drinking, whether it's rising sea levels, whether it's excess heat, that might actually make them very difficult to live in. So can you just talk a little bit about
I come back to what I spoke about earlier. I think my answer to that is that cannot be a problem that we exclusively offload to the public sector. The private sector is going to have to wrap its head around how those risks can be insured over time. And that comes back to a clear and present understanding of where those risks are going to emerge. The plea that I was going to make, if I had a magic wand, was to again, continuing in the theme of Ds, I talked about data earlier, right, and disclosure standards for the simplification, standardization, and global consistency around the disclosure standards that we set, starting with issuers and in public marketplaces that allow all of the firms operating in the financial services ecosystem to have confidence about the data that they know about their clients and their customers, so that can be accurately reflected in the way we think about stress testing, in the way we think about capital allocation, and in the way we communicate. You asked me earlier about the pinch points and what can the financial services industry be doing to drive more of this change. We need that consistency, standardization of data in disclosure in order to be able to play that role.
Thank you. Roy?
I guess my ask would be twofold. The first is that governments and regulators around the world are more thoughtful about the implications of policy. Policy often makes incredible sense and it's aligned to a great objective, but there are unintended consequences of some of that policy change, and I think having more dialogue with industry to understand the downstream implications and whether it actually translates into us not being able to offer important products that are so critical to society. So I think that would be one ask.
This is, instead of over-regulating, empowering you to help, finding ways to kind of find the balance on that.
Yeah, and understanding whether the regulation itself, which might be founded with a good idea or a good objective, whether it could have unintended consequences which actually neither the private sector, consumers, or the government actually want. So I think more thoughtfulness around that discussion would be one ask. The second ask is just back to that point around digitization. I think we've seen the economy and consumers evolve dramatically over the last decade, and I don't think regulation has always kept pace. An example of that would be that in many markets today, you still need a wet signature on application forms to apply for products, and consumers have moved forward and are happy to transact digitally with digital signatures. A lot of the regulation is still in catch-up mode to the new way that consumers are wanting to operate, and going back to access and simplification to access those masses. You're not going to do that with hard paper processes that were maybe relevant 3 decades ago.
Got you. But last,
fully agree with the comment that we cannot push all the responsibility to the governments, because, okay, being also a strong supporter of a free economy and so on, we have to take ourselves our responsibility. We talked about capital. There is capital enough available in the world. And of course, investors want a certain return. But what governments can do is, first of all, to go into, let's say, interaction with us, which is not always everywhere the case. We are too much seen as another party. Be more willing to, together with industry, to go for long-term infrastructure investments. It can be to capture water when there is too much water falling, using it X months later when it's too dry. It can be in improving road infrastructure in healthcare. And the last,
is privately funded or government funded? Or both?
Private public projects or privately funded can be. We, for instance, we invest in highways, in windmills, but also in let's say, a proposal we made was indeed to invest in water collectors in order to collect water in case of big storms and to reuse it when we need water. And the last thing is more towards the regulators. The capital requirements should be made more in line with what we need for the future. Today, whether you invest in a very clean company that is really anticipating on the needs of the climate change, or you invest in a still coal industry, doesn't make a lot of difference in your capital. Also, the long term is not sufficiently, let's say, supported in the capital regimes. And my CRO will probably not like me to plead for a change, but it's not necessarily a change of the global formula. It's more how you charge different investments that an insurer makes.
Fascinating. These are all great. Thank you. Have we got a question? We don't have that long, but we have time for one question. There must be a question from that fascinating discussion, I'm sure. No? I'm going to ask one more then. We've got 2 minutes of somebody, which is, we mentioned this question of like forced insurance, forced saving, the hail example. Do governments need to push more of this? Does this need to be something that is, pushed more deeply into different areas just to make sure there's that base load of capital available? Does anyone want to take that as a final thought?
Just a spontaneous answer. I think, it depends on context. I think at the end of the day, we all believe that people making choices in their own right, having agency is always the best departure point. But when the risk essentially does ultimately become one that society has to carry, that's why we have health insurance. And you can't drop somebody in front of a hospital, except in some parts of the world, and say, well, bad luck, you're not insured. So we have developed systems, social safety system. I think this logic will increasingly influence the insurance sector. I think we need more engagement. So I invite you all to this insurance development forum. It is a platform. I think we see too little of the insurance world still stepping forward. It's where governments or public and private meet, and also with institutions such as ours. It's actually chaired by Michel Lies, the head of Zurich. So we have many significant players there. And the last plea, because you just alluded to it, we look at insurance always at the product end.
Yep.
I'm increasingly also concerned that we understand that insurance is a major player in the capital markets. Essentially, you're a major holder of capital.
Holder of assets.
How your balance sheet helps to move us along also in terms of a more sustainable economy has to become a more explicit part of the way insurance companies manage themselves as a public good as much as a private shareholder-owned entity. Thank you.
You have 25 seconds if you want to do an add to that.
No, I think it all has been said. The insurance industry can offer a lot of solutions on the underwriting and coverage side, but also on the investment side. We invest in billions of dollars or euros, and with the requirements for companies to go to another sustainable approach, we are one, like the banks, of course, one of the gatekeepers to make it happen.
Great.
Can I make one just quick comment? I think there is certainly a role for compulsory insurance in the same way that compulsory pension plans have been incredibly effective. Yeah. But I think that there's also an opportunity for subsidisation or incentives. I think government can also play a role with providing incentives for consumers to want to make those kind of investments as well.
Brilliant. Thank you all for coming, and that was a really wonderful conversation. Thank you. Fascinating.
Thank you.
Thank you.